Here comes Dave Moore. He's bringing that friend of his from the far end of the county. Because I'm a director of the Production Credit Association, Dave wants me to tell his friend all about it. Well, I'd better give him the whole story. Now, I'd like to have you folks listen in and learn what's behind what we call our Sign of Dependable Credit.
Good morning, Jim.
Hello, Dave.
Jim, this is Harry Taylor, friend I phoned you about. He needs money to buy a team, and he wants to know all about our association.
Howdy, Harry. Dave here is one of our best boosters. I'll be glad to tell you all I know about it. Well, to go back a ways, my father says when he was a boy, many men in any community could maintain their families through their own individual efforts, often with the aid of nothing more than very simple tools. The farmer of that period used relatively primitive methods. He plowed with a team of oxen and harvested his grain with a cradle. The few things he couldn't produce for himself, he obtained at the village store in exchange for butter, eggs, or some of the other things he'd produced on the farm. But the rapid growth of our nation and the inventions of man have changed the methods and volume of all kinds of production. Today, mass production is the rule in industry. It requires large and expensive plants. Millions of dollars worth of highly specialized machinery. The employment of vast armies of skilled workers. And the use of vast stores of raw materials. Our industrial development, with the accompanying increase in densely populated areas, has brought larger and more numerous markets. To keep pace with industry, to supply these new markets with the things they want, farmers have been on the alert to apply the results of scientific discoveries and adopt new inventions. For example, the use of hybrid seed has increased the amount of corn that can be raised on the same land. And southern cotton planters use airplanes to blast the boll weevil with dust at the cost of $1.50 per acre. The growth of large cities has brought broader fields into cultivation. As a result of this progress in the city and on the farm, the need has developed for efficient machinery to supply all types of producers with adequate credit. Large industrial plants are usually located close to the centers of population from which they draw their supply of labor. In these centers, the savings of people from all parts of the country accumulate in financial institutions, and money for investment is plentiful. With this money close at hand, a credit system suited to the needs of business and industry has developed. A system that can supply credit for 30, 60, or 90 days. Manufacturers, wholesalers, and retailers need this short-term credit to carry on short-term operations. But the time it takes to produce crops or livestock is determined by nature. It can't be speeded up no matter how great the need. Between sowing the seed and reaping the harvest, time. Between harvesting and selling, time. Between the breeding of livestock and marketing the offspring, time. It is during these periods of from 4 to 5 months to a year or more that farmers like ourselves may need cash for a variety of important items. For example,
my combine has broken down. If I'm going to get that wheat cut, I'll have to get a new one right away.
It will be several weeks before his wheat is harvested and sold. Even then, it may take more than one crop to pay for a combine.
My corn cribs are all full, and I need some steers to feed the corn to. Where can I get the money?
It will be months before his cattle will be grown, fattened, and ready for market.
I'm going to need 5 tons of fertilizer this spring.
I need money to pay my cowhands.
I need money to buy a mule.
My buildings need painting.
From all sections of our country comes the same cry. Money for seed, money for feed, fertilizer, spray materials, equipment, labor, the purchase of livestock, the making of repairs, or for general farm expenses. From the cotton fields of the Southland, where farmhands walk countless miles to plow, chop, and cultivate, where many hands are paid during the picking season before the crop is ginned and sold, comes the cry. From the tobacco farmers, who have labor charges throughout the year, cultivating and spraying during the spring and summer. A harvest requiring many cuttings, where only hand labor can prepare the leaves for the important curing process, and the skill of the farmer determines the quality of the leaf. From fruit growers in Washington, New York, Virginia, Florida, Texas, and California. From the cattlemen and wheat growers of the Western Plains. From ranchers whose sheep range high on western mountain slopes. From corn and hog farmers in the Midwest. And from northeastern dairymen and poultrymen. From all comes the same cry. They all need credit, suited to their individual needs. But how can people in the cities ever know the credit needs of farmers or stockmen? Can these people determine which farmers use credit profitably? Which farmers can and will pay back money they borrow? Can they lend money to farmers in widely scattered areas for widely different uses? What do they know about soils, crops, climate, and marketing conditions in farming communities hundreds or thousands of miles away? You remember by 1933, farmers were in bad shape as a result of several years of depression. To make matters worse, the farmers' sources of credit dried up because they were dependent on the local supply of funds. Even the best farmers were barely able to keep going. Machinery was wearing out. Buildings went unpainted, and they couldn't get the money to farm the way they should. In the fall of 1933, I borrowed money to buy some feeder cattle, only to have my loan come due just as my feed was giving out. That was about a month before the cattle were ready to market. I tried to borrow more money to buy a little extra feed, but I couldn't get my loan renewed, and it looked as though I'd have to sell my cattle before they were ready. To make matters worse, the market was going up every day. Just as I was about to sell, I had a letter from the county agent telling me a group of farmers had organized a new cooperative called a Production Credit Association to lend money to farmers for financing their crops or livestock operations. After talking it over with my wife, I lost no time in getting to the office.
Good morning. Clark's my name.
How do you do? My name is Jim Henderson. I'm interested in getting a loan to finance my feeding operations. But first, I'd like to find out more about how this association operates.
I'm Secretary of Treasurer's Association. Perhaps I can help you. Have a chair.
Thanks.
This is a cooperative, organized to make loans that are sound from the farmer's standpoint. Loans that are to be repaid out of the farmer's normal operations without resorting to the sale of any of his needed work stock or equipment. In order to make sure that we are setting up your loan to best suit the needs of your business, it is necessary that we have complete information on your farming operations, your financial condition, the progress you are making, how and when you are going to use the money, and what you have for security. With this information, together with an estimate of your income and expenses, we help you work out a financial program for the year. If your loan is approved, the money will be advanced as you need it. We also help you set up a repayment plan based on when you expect to sell your livestock or crops. Our interest rate is low, and the cost is kept at a minimum by charging interest on each dollar only for the actual number of days you have it. Other charges, such as the cost of having an association representative visit your farm, are also reasonable. Since this is a cooperative, all the voting stock is owned by those who use the association. Each member owns stock equal to $5 for each $100 of his loan. This stock entitles him to one vote in the affairs of the association, including the election of directors. Your application would be considered by our loan committee, which is appointed by the board of directors. This committee is made up of 2 farmers from the board of directors and myself. The men on this committee are thoroughly familiar with local farm problems, so we are able to adjust the terms of each loan to fit the individual farmer's particular operation.
Well, that certainly sounds like a good way to lend money to farmers. I'd like to make out an application for a loan right now.
We will be glad to help you make out your application.
A representative of the association came out to my farm promptly, and a few days later I received a letter saying the loan committee had approved my application and a check for the first advance was enclosed. The other advances arrived on schedule, and I repaid the loan as I had agreed to. But that first loan really put me back on my feet after the Depression. Instead of selling my stock in the Production Credit Association when I paid off my loan, I kept it to use as a basis for later loans. Whenever I've needed credit, I've borrowed from the association. Every year, our association holds annual meetings for members. At this meeting, our officers report on the results of the year's operation and discuss plans and policies of the association. Members take active part in all phases of the meeting and are particularly interested in the election of directors. They like the idea of picking men from their own membership, men like themselves who know farmers and farming, men who know the farmers' problems. And like many of the associations in the country, ours always is served lunch at noon, so we can give over this one day a year to become fully acquainted with the financing end of our farm business. The board of directors decides the policies of the association and hires a secretary-treasurer and other employees to carry out the everyday business. We also appoint a loan committee consisting of 2 farmer directors and the secretary-treasurer to consider all applications for loans.
Jim, tell us where the money for these loans comes from.
The money for loans is obtained by discounting our notes with the Federal Intermediate Credit Bank. This bank, in turn, obtains funds by selling debentures, which are short-term bonds, to investors in the financial centers. These debentures are secured by our notes and those from farmers borrowing from other production credit associations. In other words, money from the cities all over the country goes to work on the farm. This access to investment funds, together with a combination of local responsibility and helpful supervision provided to them by the district corporation, are the main factors contributing to the success of production credit associations. You remember the 525 production credit associations that serve every agricultural county in the country started from scratch in late 1933 and early 1934. The other day I saw a chart that showed some of the factors that indicate their success. Year by year, the number of members, the amount of money loaned, the stock owned by members, and the reserves built up to protect the members' investment have all grown. Now there are about 300,000 members. Each year, between 140 and 150,000 farmers attend their annual meetings. Another important measure of success is the flexibility production credit associations have shown in being able to finance a wide variety of farm enterprises all over the country. Down in the southern states, the farmers who raise cotton, tobacco, rice, and sugarcane borrow to buy fertilizer, mules, and machinery, as well as to hire labor for planting, cultivating, harvesting, or marketing their crops. Rice growers use their loans to lift water. It takes 1/2 gallons to the acre during the growing season. Large pumps operated by diesel or electric power are required, often running 24 hours per day and sending forth as much as 2,500 gallons per minute to be directed across the field. Rice farmers also use their loans to pay the labor costs necessary to build and maintain miles of levees and dikes for controlling the water level on the fields of growing grain. Farmers in the Middle West borrow to buy livestock, farm machinery, gasoline and oil for their tractors, to pay general operating expenses, or to buy hogs, feeder cattle, or land. Out in the western livestock country, stockmen borrow to buy cattle to stock their range, or sheep to fill out their bands, to pay shearing expenses, to drill wells, to maintain fences, or to pay cowhands or sheep herders. Fruit growers in New York, Virginia, Michigan, Washington, Florida, and California borrow to buy spray materials, boxes, barrels, or crates, or to pay the expense of picking, grading, storing, or shipping their crops to market. Dairymen in the eastern milk sheds are borrowing money to buy feed, to repair and improve their barns, to build silos for winter roughage, to replace poor or worn-out cows, or to buy milking machines or electric coolers. And production credit associations are serving farmers engaged in specialized enterprises, such as growing shade tobacco in Connecticut and Florida, where the crop comes to maturity under acres of cloth, and huge sheds are used to cure these future cigar wrappers. And that strange farmer who locates his crop with the aid of buoys, landmarks, and the turn of a wheel. The oysterman, operating in our coastal waters, uses credit to operate a fleet of sturdy boats and pay a crew of equally sturdy men. By working together, small as well as large-scale farmers are able to command the interest and respect of investors in the financial centers, and thus make possible their sign of dependable credit. Through their own credit system, farmers and stockmen have worked out a method to finance modern farm and ranch operations, a method that gives us credit on a basis of equality with business and industry. This dependable source of credit makes it possible for good farmers to participate in the various farm programs, to follow the best farm practices, and thereby climb the ladder to a better family living. And insofar as private credit institutions follow the example of production credit associations by lowering their interest rates and making loans on terms suited to the individual farm business, hundreds of thousands of other farmers who are not members also benefit.
Thanks a lot for telling me about your Production Credit Association. It certainly fits the needs of all kinds of farmers and stockmen, and I'm sure it's just the place my wife and I have been looking for.
Well, Harry, why don't you go down tomorrow and see if they'll lend you the money to buy your team?
I surely will.